Welcome to the Deep Dive. Today we're looking into something pretty fascinating, a quiet revolution happening really behind the scenes in retail logistics. It's changing how everything gets from A to B, and there's this one company, maybe not a household name yet, called Symbotic. Right at the center of it, they're using AI and robotics, and they're really shaking up how the big retailers manage their supply chains. Now, you've gathered a ton of information on Symbotic financials, market stuff, even their stocks technical signals, which look interesting. So our goal here is to unpack all that, figure out what makes them stand out in this whole AI automation wave.
Yeah, it's fascinating because, Symbotic isn't just like selling equipment. They're actually building the fundamental infrastructure for future retail, using AI, using robotics. They're chasing efficiencies people have only really dreamed about until now, which naturally brings up a big question. How does a company like this scale up so fast in such a complex field? And what does that signal for the wider economy? It's pretty disruptive stuff.
That's a great way to put it. Disruptive. And it's weird how Symbotic Inc. has been so effective, yet kind of under the radar for a while. But that seems to be changing now in 2025. They're not just another vendor. They're really transforming how giants think Walmart, Target run their huge warehouses. I mean, just imagine the scale we're talking about.
Exactly. So what they do basically is design and build this really smart AI-driven infrastructure. Think of it like the automated brain and the muscle for these giant distribution centers. Their systems handle the whole flow of goods, receiving stuff, storing it super densely, and then grabbing it really fast when it needs to ship out. If you step back, the big deal here is efficiency, right? Cutting errors way down, modernizing an industry that was, very manual for a long time. For the big retailers who are dealing with customers wanting things faster and always in stock, this kind of automation, it's becoming less of a nice to have and more essential to compete.
Okay, so the vision makes sense. The tech sounds critical. But what about the money behind it? Is the financial foundation strong enough to support this kind of revolution? Let's get into the numbers because honestly, Symbotic's financials look pretty compelling, especially for this kind of business.
Oh, they really are. When you look at their financial health, it's actually quite unusual for a company growing this fast. They've pulled in $2.07 billion in revenue over the last 12 months. And that's with year-over-year growth still clocking in above 42%. Just look at the last quarter, Q2 fiscal 25, they reported nearly $550 million in revenue. That's a stunning 40% jump from the same quarter last year.
Wow, okay. 40+% growth. How does that stack up? I mean, compared to maybe the broader automation sector or other AI companies, is that like way ahead of the curve?
It definitely stands out. Yeah. You see growth in industrial automation, but usually not that fast. And sure, lots of AI startups are growing quickly, but often from a much smaller revenue base, Symbotic doing this level of top-line growth while dealing with actual physical infrastructure, that's what's pretty unique. But it's not just revenue. Their bottom line is improving too, which is really encouraging. That net loss, pretty standard for tech companies, scaling up, it's shrunk significantly down to just, $3.9 million in Q2? They're basically right there knocking on the door of profitability.
Right, and cash flow. Because, revenue is one thing, profit's another. But cash flow often tells the real story about operational strength, doesn't it?
Absolutely. Critical point. And their cash flow is, remarkably strong. Over $300 million in free cash flow just in Q2. And for the whole of fiscal 2024, it was a massive $361 million. This isn't just impressive. It's like foundational stability. And then there's the balance sheet. It's rock solid. They're sitting on about $955 million in cash and get this zero long-term debt.
Hold on. Zero long-term debt. In a business that must require huge capital investment while they're growing like crazy. That's really rare. What's the strategy there? Is it just being super cautious, or does that give them some kind of, edge?
It definitely gives them an edge, maybe even an unfair one, you could argue. In the tech world, you often see this growth at all costs mentality, piling on debt. Symbotic showing you can do big capital-heavy innovation with a really impressive financial discipline. Their current ratio is over 1.0, meaning plenty of short-term assets to cover liabilities and having no long-term debt. That means serious liquidity and flexibility. They can handle bumps in the economy, invest heavily in R&D, maybe even make acquisitions, all without worrying about debt payments or needing to raise cash when the market's bad. For a company leading a major industrial shift like this, that kind of financial strength isn't just compelling, it's strategically invaluable, really.
That financial muscle makes perfect sense leading into what was maybe their biggest catalyst so far, that huge deal with Walmart. That really seemed to put Symbiotic on the radar for a lot more people.
Oh, absolutely. The Walmart deal was a game changer. Earlier this year, Symbiotic actually acquired Walmart's own advanced robotics division. So this wasn't just like a service contract, it was a deep strategic integration. Walmart basically handed over their internal robotics efforts to Symbiotic. The payment structure was interesting too. $200 million upfront, plus potentially another $350 million based on performance. The impact on Symbiotic's business, you just can't overstate it. That deal alone added over $5 billion with a B to their backlog, their guaranteed future work. And of course, it cemented their relationship with the biggest retailer on the planet. The market noticed immediately. The stock jumped, almost 20% in one day on that news?
So it's not just the money or the validation, right? It sounds like Walmart, a logistics giant, basically said, okay, you guys do robotics better than we can internally. That's a huge statement. Does that send ripples beyond just retail or other industries looking at this?
That's exactly the implication. When a company with Walmart's scale and, frankly, logistics know-how not only uses your tech, but sells you their own robotics unit, well, that's a massive vote of confidence. It validates Symbiotic's tech, their execution, their whole vision. And stepping back, yeah, this could signal a shift towards more specialized automation partners across industries. Think about other massive logistics operations, big e-commerce players, 3PLs, maybe even manufacturing, automotive. Anywhere with complex material handling. They're all watching this. It's like a blueprint. It shows Symbiotic's leadership and potentially opens up this huge market for AI-driven logistics across the whole supply chain.
Really fascinating implications. Okay, so looking forward then, what should people watching this space keep an eye on? What are the next key milestones or numbers to track Symbiotic's progress?
Right. Well, looking ahead, the next big thing is definitely their Q3 earnings report for fiscal 25. That's expected late August. It'll be a key checkpoint. And within that report, you'll want to watch a few things specifically. First, can they keep that revenue growth humming above, say, 35% year over year? Second, are margins still improving? Are they getting closer to consistent profit? And third, how's the Walmart rollout going? Any updates there will be important. Beyond that, any news of new contracts with other big retailers or logistics firms would obviously be a major catalyst for more growth. It's probably also worth noting, analysts currently have price targets mostly hovering between $45 and $55. The stock's trading around $37, $38 now as of late June, so that suggests some potential upside according to them.
Makes sense. But of course, with any company growing this fast, especially in a new tech area, there are always risks. You should probably touch on those too, be transparent.
Absolutely, you have to look at the whole picture. The growth story is exciting, no doubt. But fact is, Symbiotic isn't consistently profitable yet on a net income basis. They're close, very close, but not quite there. That's always a point investors watch. Second, the valuation is, well, pretty high, trading around 51 times free cash flow. That means the market is pricing in a lot of future success already, high expectations. And it's important not to forget, they did have that significant accounting issue back in late 2024. It hit the stock hard briefly. Now, management seems to have put stronger controls in place since then, but it's, part of the history and a reminder of potential volatility. But you have to see these things in context, right? These are pretty common realities when you're looking at high growth, emerging tech stocks. They're often priced for perfection, which means more risk, more ups and downs. It really raises that classic question for anyone looking at this space. How do you balance the undeniable excitement around the innovation, the huge potential growth, with that inherent volatility and the risks that come with high valuations? It's always a balancing act.
And that exact tension you mentioned, innovation versus risk, you can almost see it playing out directly in the stocks chart, can't you? Let's shift to the technicals for Symbiotic. Ticker SYM, what's the story there?
Yeah, the technical picture right now is particularly interesting for Symbiotic. If you look back, the stock had this really strong run-up starting way back in November 2022. Big bullish move. But then around August 2023, it started to lose steam and fell into this clear downtrend. It formed what traders call a descending channel. Imagine the price bouncing consistently between two downward sloping lines for months and months, right through September 2024. It just kept respecting those boundaries. But now, and this is where it gets potentially exciting, as of June 2025, the price has actually broken above the top line of that channel, and crucially, it closed above it. That breakout is generally seen as a strong bullish signal, like the trend might be changing. Also, if you look at the weekly chart, the stock is now trading above its 50-period exponential moving average, the 50 EMA. Think of the 50 EMA as kind of a medium to longer term trend indicator. Getting above it often suggests momentum might be shifting back to the upside. Now, if you zoom into the daily chart, there's a really key resistance level right around the 41 or more mark. Traders call this a supply zone. Basically an area where sellers might step in because they bought there before and want to get out even. It's like a ceiling. So there are kind of two main scenarios now. If the stock hits $41 and gets rejected, pushes back down, it could fall quite a bit, maybe even back towards $22.50, back into that old range. However, if it manages to push through that $41 area and really close decisively above, say, $41.80, then that could open the door for a significant rally. The next major target level up from there would likely be around $54.
All right, so it's like the charts are kind of paused, waiting to see if the fundamentals, the earnings, the news will give it enough power to break through that $41 ceiling. That focus on 41 wonders really tells you something about market sentiment, doesn't it? It shows investors believe the good news, but maybe need just a little more confirmation before fully committing to the next leg up. There's still some caution there.
Exactly. It's truly at a critical juncture, a potential breakout point. Traders, investors, they're all watching this 41 wonder zone very, very closely because the next move from here could really set the tone for the stock for the next several months. It's testing the market's conviction about Symbotic's future.
So let's pull it all together. We've seen Symbotic's solid financials, the truly game-changing Walmart deal, and its absolutely critical role in this AI-powered logistics future. It really is a fascinating case study of how technology is reshaping massive industries, sometimes quietly, but definitely profoundly.
Yeah, precisely. I think the core takeaway is pretty clear. The future of retail really depends heavily on the kind of advanced smart automation that Symbotic is delivering. As customers demand things faster, cheaper, more reliably, companies like Symbotic are becoming, well, essential infrastructure for any major retailer wanting to keep up.
And maybe a final thought for you to consider. As AI and robotics keep getting woven deeper into our daily lives, how things are made, how they get to, you think about how many other hidden companies like Symbotic might be out there right now, quietly building the foundations of tomorrow's world. How might their innovations change the way you get your goods and services in the years ahead? Something to think about. We'll definitely be here, continuing to dive deep.